portfolio, that's just all the stock you own. So if you owned Microsoft and you owned Apple and you owned Target and you owned, you know, Nextel or Sprint or whatever, you just take all the shares together, that's your portfolio. Okay. Your trades, that's the buying and selling of stock. And it's called a trade because it is a literal trade. Trading money for stock shares. It's being made with another stockholder. If let's say Microsoft, every share of Microsoft is owned by someone, like the company doesn't have any to sell anymore. Every single share is owned by someone. If no one is willing to sell theirs, you cannot buy it. So somebody has to be like willing to trade with you. Okay, rounded lots is when you buy shares in multiples of 100. Okay. And then an odd lot is shares less than 100. So if I bought 250 shares of stock, I'd have 2 rounded lots and 1 odd lot. So now we have gross capital gain. You have a gross capital gain if you sell the stock for more than you bought it for. That's my good grammar. Sell stock for higher, dollar symbol, than purchased at. But you get the idea, right? Okay, and a gross capital loss is if you sell the stock for less. Obviously, you do not want capital losses. You want capital gains. I'm sure you've heard buy low, sell high. Yeah, you want to buy low, you want to sell high. Usually people will only sell the stock for less money than they paid for it if the company is like tanking. And they want to get whatever money they can out of it. Doesn't always work because if it's tanking, nobody wants to buy the stock. Or if there's like a desperate need for capital for whatever reason, like, you know, you have a bunch of stock, you get in a car wreck, you need a new car, you have no money, you have stock, you might sell your stock, and you might take a loss on it because you need the car more than you need the stock. Okay, so we've got Marlene who purchased stock for $7,241, and now she sold it for $9,219, and we want to figure out what her capital gain is. So we're just going to subtract. That's 9. So she made $1,978. The percent gain, right? I have the current price minus the purchased price divided by the purchase price. So that gives me that 1978 over 7241, which I cannot do in my head, shockingly. Seems really high, actually. 5 years ago, Jessica bought 300 shares of the cosmetic company stock, and she bought it for $34.87 per share. And yesterday, she sold all of the shares for $41 per share. Now, we want to know what her capital gain is, and that's all of it. There's two ways you can do this. You can do it the hard way or the easy way. Which way you want to do it? Okay. I'm going to take that $41 and I'm going to subtract $34.87 from it. So that's $6.13. And I'm going to take $6.13 and I'm going to multiply it by 300. So her gross capital gain is $1,839. Now the hard way would have been to multiply $34.87 times 300 and then multiply 41 times 300 and then subtract those numbers. And it's just bigger numbers. So we're going to do percent capital gain on this one. We've got 6,100 is his selling price, 34.50 is his purchase price. So I'm going to take 6,100 minus 34.50, and I'm going to divide that by 34.50, and I'm going to cheat. So he's got a 76.8% capital gain. All right, so we have a stockbroker is a person that's licensed to buy and sell stock. You cannot buy and sell stock unless you're licensed. Like I can go online and buy stock, you know, on the computer, like I can put in an order, but there's a licensed stockbroker that's actually creating the transaction.
So there's always a fee? Always?
There's always a fee.
It's just higher if you're a stockbroker that is more personal.
Right. Yeah, so yeah, there's always a fee. There could be a flat fee, so like there could be like if I go online, there, you guys have seen the commercials for E-Trader with the talking baby? I don't know how much they charge, but let's just say it's $10. I could buy and sell 200 shares of something and it's still going to be $10. Or it could be a percent of the total. So if I sell $19,000 worth of stock, maybe they take 2%. And that's called a commission.
With the flat fee, does it make more sense to me that it would be per stock or per share?
The flat fee is for the total transaction. Total transaction. So it's,
So would it be like,
if I'm buying Microsoft, I pay a flat fee for that transaction. If I buy, and this kind of depends on the brokers, I might get one flat fee for buying Microsoft and Sprint, or they might charge me a flat fee for all the shares of Microsoft and a flat fee for all the shares of Sprint. That kind of depends.
so it wouldn't be like per share?
No, it's not per share. It's per transaction, and the transaction is for like an amount of shares. Yeah. Discount brokers are really low fees. They charge really low fees, but they only do what you tell them to do. So they don't offer you any advice. So let's say I've decided to buy Kmart stock. You guys know what's happening with Kmart, right? They're going out, they're gone, you know, essentially. They're closing down, they're going out of business. But for some reason, I'm like, I look online and I'm like, oh, Kmart stock is really low. I should get some of that. I call the discount broker, or I go to the discount broker. I want 500 shares of Kmart. Now, in his head, he's going to be, okay, you're a moron, whatever. But he's not going to tell you that. He's just going to, okay, here you go. Here's 500 shares of Kmart. Good luck with that. They don't give you any advice at all. Stockbrokers also can be called financial planners. But that's it. That's the types you have. If you tell your broker to buy at the market or sell at the market, you're telling them to get the best possible price. So if the stock is going up, it's going up, it's going up like that day, and then it drops like a penny, they're going to buy it right then because they're going to think it's making another downward trend. They're going to try to get you the best available price. Or you can give them a limit order. Sell the stock when it hits $80. And so as soon as it's $80, they'll sell it. If it doesn't hit $80, they're not selling. They'll just hold on to that order until it hits $80. Net proceeds, it's a profit, but you can lose money, so I put or loss in parentheses. It's after all the broker fees have been deducted. So when you buy the stock, there's a fee. And then when you sell the stock, there's a fee. So when you take your money from the proceeds, minus 2 fees. Okay, so it's the fee when you purchase and the fee when you sell. And that's your net proceeds. Calculate the net gain or loss. You have to include the broker fees. So Lee made 2 trades through his online discount broker, WeTrade. WeTrade charges a fee of $12 per trade. Okay, so his first purchase was $3,456, and his second purchase is $2,000, and we want to know how much did he spend. Well, he's got 2 trades at $12 each. So that's $24 in fees. We have to count for both of those trades. So I take the money he spent on one stock, the money he spent on another stock, and then the fees. And I add that all up. So he spent $5,480. You pay one price. If you use a telephone, you pay the online fee plus another convenience fee for calling on the phone. Or if you use a broker, you pay the fee plus a commission. Okay? And then they'll do that based on how much money you're giving them to play with. If your portfolio is less than $250,000, then they're making less money off of you, so they charge a higher commission and higher fees. If your portfolio is more than $250,000, well, they're going to make more money off of you, so they charge a little bit lower. It's a way to encourage you to give them more money in your portfolio. So she had, okay, her current value of her portfolio is $11,567. Okay. She used a broker. To buy $7,000 worth of stock. Okay, so her current portfolio is considerably less than $250,000. So she's in this column because she used a broker. So she's going to pay a commission and the fee. So she's paying $15 per trade plus that commission, which is 0.5% times 7,000. But I can't multiply percent. I have to turn the percent into a decimal to multiply it. And to go from percent to decimal, I'm going to move the decimal 2 places this way. So it's $15 plus 0.005 times 7,000. And I'm going to cheat again. So 35 bucks. So she's paying 15 plus 35, so that transaction, not 40, cost her $50 in fees. Erin purchases $23,510 worth of stock and pays a 1% broker fee. And then she sells the stock at $27,300 and she uses a discount broker. Okay, so here's what we have to do. We have to find the broker fee. So 1% is equal to 0.01. So I'm going to multiply this by 0.01. Okay. So $235.10 is the first fee. Is that so far okay? And then $21 is her second fee. So I've got $235.10 plus $21. And that's total fees. Okay. So her total fees are $256.10. Obviously, using the discount broker on this one is a better choice, but she sold her stock for $27,300 and bought it for $23,510. So I'm subtracting. Why am I doing that? So on the stock, she made $3,790, but it's her net proceeds. So I have to take that $3,790 and I have to subtract the fees. So she actually only made $3,533.90.